Good afternoon, my little shits. Every time, I wish there was a faster way to fucking do this. How we doing? Alright, I am still getting to the ass end of this respiratory infection. The doc said that it's gotta be viral, but then here's I am over here fucking, I still feel like shit, even though he gave me the fucking medicine for a viral. So I'm starting to think it's a fucking bacterial. I don't know. I still feel like ass. Let's get to it. Oh, real quick, because I forgot to put this in the video. Like the video, sub to the channel, fondled his dick. I actually do want to bring up, last Friday, was one of the most monumental, actually no, the most monumental, instance of people seeking a hedge. Quote, options bubble Friday's 8.4 million contracts. Okay, we're not talking like notional value, we're talking literally just the amount of contracts. 8.4 million contracts, and this is the largest SPY put volume of all time. Literally within the history of SPX or SPY, they're the same thing. One's just an index, or an index of an index. This is the biggest amount of puts ever purchased. So, American economy still breaking records every fucking day. Love it. So, where does that lead us? Well, let's go ahead and take a look at SPX real quick, and we're going to go to the daily. This is the most pivotal moment. I'm just going to say first off, for me, that I've seen in any market, I think, because we have what is either going to be a double bottom, or we are the double bottom as the economy gets fucked, right? So just real simply, let's put a nice little horizontal line as a support. This right here will either be a double bottom or the bigger neckline of a bigger head and shoulders pattern. This is the SPX on the daily, by the way. So this week is going to be just fucking insanity. And shout out to Joshua, another fantastic shill, just one of the most shilliest, most logical, you know, well-spoken, really mean-welling people. Such a shill, you gotta love him, for pointing out that this is the current schedule of possible volatility dialogues, is what we'll call them. You know, recession is no longer 2 back-to-back quarters of a declining GDP, just as anything that might cause the markets to go down will be now denoted as volatility dialogue or conversation. Tuesday and Wednesday we have Powell. Tuesday and Thursday we have Bullard. Monday and Thursday is Mester, Bernard on Friday, and Bowman on Wednesday and Friday. This is going to be a lot of potentially volatile dialogue, right? So let's get into the charting. So as I said, this could either be a double bottom or just a massive fucking decline coming. Given the hedges that like everybody's looking for, like everyone, this is the problem. And I think this is going to be like a really interesting point that history will really expound upon and give this retrospective kind of opinion on. We know, everybody knows there's a crash coming of some sort, and it's to the point now where everybody is anticipating such a crash that they might actually be buying the crash out. Does that make sense? There is so much anticipation for something bad to happen that the acts of preparation for it can potentially negate that particular thing. So when history looks back on this, it's going to be really, really, really fascinating to see what kind of takes are given about, you know, whether it was retail jumping in, you know, more than ever, or if because there was a crash that was destined for so long, or a major correction, whatever euphemism you want to use, if that somehow was at play here, and if that might somehow cause some other major event to go on in the future in terms of how people view crashes and whatnot. No one knew it was coming in 08, or no one knew it was coming in 08, no one knew it was coming in 01/2000, no one knew it was coming in fucking 87. You know, it's going to be really just fucking fascinating to see how this goes about. So, as far as the technicals go, right? So let's get into the charting here. We do have a handful of indicators here. The two ones in particular that I do want to mention and plug real quick are the Wyckoff Sniper, which you can find on TradingView, along with the Canorium Suite of the volume-based regime change. Both of these indicators, in my opinion, are absolutely quintessential and invaluable. And yes, I fucking made them. So, right. Could be having a double bottom. Yes. We also, if we look at this candle, I think this is called a hammer candle. I never really got into the naming conventions of particular candle types. Whatever it is, though, this is indicatively a bullish formation, especially on a bigger time frame like the day. You can also see when that happened back here, blah, blah, blah. You can find tons of historical references. The way that you can denote these is that you have an open and a close, one of which where the open doesn't have a top wick, but then the close and below it has a wick, and the close is significantly higher than the bottom wick. So yeah, you could view that as bullish. It's going to be an interesting one. We also have a buy signal that took place on the 4-hour from the volume-based regime changes. Kind of interested as to what futures are doing. Not open yet, duh. So that's what the 4-hour is reading. This does look like on the 4-hour, this is a staple head and shoulders. Head, neckline, and your shoulders. The irony, though, is that inside of a head and shoulders, you can actually sometimes have an inverted head and shoulders on the bigger time frame, which again is going to be answered this week at some point in time. But yeah, this could be a classic double bottom, and if you want to take the Wyckoff approach, this could be another piece of spring action taking place, which would just make this a giant piece of fucking accumulation. Composite Man always behaves in mysterious ways. So I really hate to be this guy that's like, oh, maybe it's this. But hey, maybe it's this. We're gonna find out. Yeah, it's gonna be a wild ride, to say the least. This week is gonna be very, 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 very pivotal. So the SPX on the 4-hour does have a buy signal. And our daily readings, still a bearish volume regime. Bullish momentum still decreasing, bearish momentum kicking up. Pricing wise, macro momentum is neutral, and our micro momentum is still reading bearish. 4-hour, the exact same thing with the exception of bullish momentum is getting a reading for a kick up. And then again on the 1-hour, same thing as the first. So yeah, this is going to be very interesting in terms of levels that we're going to be looking at here. Of course, where the double fucking bottom is, which is sitting at about 364, 365. And then, obviously your most immediate rejection after that is going to be sitting at 371 or 372. And then 375, and then you got room all the way up to 387 and 390. So this range all the way through here, wherever the fuck, there we go. This is going to be either a range of accumulation or distribution, and we're going to be keeping an eye on that. So everywhere from 375 up to 387 is going to be your zone for what this really is, which is give or take about 3.5% worth of breathing room. Not a lot. Which actually kind of makes sense given all of these volatility dialogues that are going to be coming up. This is definitely going to be a chop zone, definitely going to be a week for Theta Gang. And then, ironically enough, your levels of where you would see a breakout or a breakdown are symmetrical. Your breakdown would occur at this gap right here, and then the levels for your break up would be at this level, which I literally think are the exact same. 0.85. Damn near the same. 0.85 and 0.86% worth of breathing room for if it breaks down or breaks up. So, yeah, that's fucking wild, man. That's pretty wild. Composite Man, what are you fucking doing? I'm gonna color code these real quick. I might make this video literally just for SPY first, and then I'll do another fucking instance for all the other fucking stocks out there in this fucking stupid fucking market. Yeah. So, I mean, like the 1-hour kind of looks like a spring, you know? Like, I don't know, like if we look at volume here, it started to kick back up, going into close, and then it was predominantly selling, and then you see these waves of buying back in, which you could call, you know, just a standard bear market rally. But with the sequence of events going on here, I kind of think otherwise. Just the flavor of movement we're seeing here. Fuck. So we're gonna do a really, really crude set of trend lines here. So you have this expanding inverse wedge, I think is the term. I kind of just made that up, but I think it's already a term. Where you just literally have this expansion taking place, where as you begin to navigate all of these levels while you're going up and down, all of this right here begins to expand. And those levels are... Oh, come back, you motherfucker. All of these levels are respected at each rejection and support. And so, as you can see, those levels literally just begin to expand. The amount that you go up and the amount you go down expands. Why is that important? Well, that means that you have, one, you have new regimes entering, as well as old regimes leaving. But secondly, that is just staging the next movement within the market. When you have expansion, that's typically when you have these explorative phases within pricing, and that ultimately sets your direction moving forward, which is why this whole concept is important over here of this and this. These two levels, which we're denoting as the breakdown or break up zones, is you have the opposite, which is this tightening. And you see this back and forth, this kind of dance always happen right before major things happen, and also right after those major things have happened, where the former being you see price expansion leading into something big, and then you see a consolidation where things compress and decide their direction going into the next chapter of whatever happens. So here we are. This is kind of the schematic going forward. This whole entire week is just going to be fucking insanity. I guess the primary things to look out for are the expansion of price movement, which might not be much to that this week, I don't know. But then also the compression. And when you see things begin to kind of constrict and become compressed, that's going to be your indication as to whether or not things are going up or down aggressively. Up next, the beloved stock, where I'm hated by so many holders of it. AMC, my favorite stock, so great, so magnificent, make me lose so much money. Fuck my life. Okay, what do we got going on here? Oh, that all looks familiar. Right, so let's take a look at the Wyckoff Snippy Snipe levels here. Below accumulation, typically whenever you get to this point, there is a massive upward move waiting. This is on the daily, by the way. So back here, we had a 30% move. Back here, we had another 20% move. Back here, we had another 30% move. And then back here, we had a 100+% move. And just one more for shits and gigs. This one back here was 180. So we're below that particular level that the Snippy Snipe is picked up on. By the way, if you want to get the indicator, just look up Wyckoff Sniper on TradingView. And if you want the other one, fucking Cronorium volume-based regime changes. So yeah, this particular level is where you see this major pop-up happen. It's basically free money. Just buy calls when things start to look okay, right? If you're below that line on the daily and the market is starting to chirp up a little bit, buy fucking calls. Not financial advice, by the way. No bullish volume alert yet on the daily. Nothing on the 4-hour. Okay, so we are approaching what would be a first rejection. If we do break past this, it's a quick move up to 836, and if there's enough momentum behind it, you can easily find yourself back in the $10 range. Sounds pretty like stupid, like, oh, it's going from 8 to 10, but that's a 25% fucking move. So again, percentages. It's just fucking percentages. It's amazing. Yeah. Volume kind of looking dry. You see the daily here. Yeah. It kind of looks like bulls have been exhausted to some extent. It looks like there would be selling pressure to back up this buying pressure that happened. Buying pressure is in blue, and red is selling. So yeah, kind of looks like volume on the buy side has been exhausted. We'll keep an eye on that. Yeah, the 1 hour. Okay, so the 1 hour actually kind of looks okay. It needs more volume, otherwise this shit is just gonna get fucking slapped real quick. It's definitely all dependent on whatever the major indices do, as it usually is. And if you're new around here and you think that these stocks just are being suppressed all the time and blah 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 blah, corruption, let's go ahead and take a look at what these kinds of stocks do, what their behavior is whenever the major indices are not doing well. So we set this here. And oh, would you look at that? Anytime the overall market is doing shitty, it appears as though that these stocks also do shitty. By the way, the red indicates if the broader markets are doing poorly. The brighter the red, the more intense the red, the worse they're doing. So, and through that lens, you can see that anytime there's lots of red, it is typically going down. And when there's not red, it is typically going up. And rather aggressively, too. By the way, kind of gives you a little suspicion of a short squeeze. Alright, enough of that caricature. Yeah, so I guess what we're looking for here is just whatever the major markets do. If the markets do bounce back a little bit this week, if some way, somehow things don't fucking blow up, this definitely can reach its way back up to the mid-tens really quickly. And assuming that all of these hedges, these record-breaking fucking hedges, are for the short side, then, you know, inversely it would be the opposite for, inversely opposite, double opposite, nice. But assuming that you have, this particular stock has a negative beta, in theory, so if there's a ton of hedges for the broader markets going down, that would mean that you're typically shorting stocks that go down during bear markets. So in the event that this does start to go up, it could literally, it can squeeze again. Not Moaz though, I'm sorry. So let's check out Jimbo. Pretty much the same thing. I was liking how much Jimbo was holding this level up here. But in retrospect, that was clearly a rising wedge to some extent. And yeah. So of course it catches that accumulation down here. A common pattern is for it to do this, which is just accumulation. But yeah, no, it could also turn out good. That's kind of the path I'm seeing, that if things do somewhat rebound in the markets. Bouncing off of daily accumulation, which is good, because if historically, again, we can look back, and we can see that whenever this happens, that's a 30% move, 43% move, distribution goes to 50%, another accumulation was 70%, back here, 160%, back here, 55, so you kind of get the gist here. Rejected off of the 1 hour. Yeah, I don't know. Still reading bearish. And macro time frames are neutral. So definitely all based on whatever the broader markets do. Yeah, Tesla. Tesla's an interesting one, because despite all of the insanity that's been going on, where if we take a look at Apple, they are currently down 15% year to date. Amazon is down 32% year to date. Let's see, Meta down 60% or 59% year to date. Netflix currently down 62% year to date, and yet Tesla year to date is only down 28%, right? Like only 28%. But if we want to get into the neckbeard, Giga Chad, whatever discussions of company fundamentals, Tesla has always been a stupidly overly priced according to fundamental stock, and it kind of shares its reins with the likings of Facebook or Meta, Amazon, Google, all these big tech stocks. Tesla is kind of the redheaded stepchild of that collection of stocks. And with it only being down 28% year to date, I kind of feel like this is the same treatment that people looked at Google with when going into like Q2 of this year. Google hadn't really had any major selling applied to it yet. And then before you knew it, it fell off a cliff. It was kind of like the next target in terms of overly inflated company valuations on the chopping block. So I think Tesla is going to be the next one, and so I'm going to open up a really convenient, long-dated set of puts deep out of the fucking money, and if it works, then it works. But I really do think that this is the next particular stock or company on the chopping block for all of the voracious selling that's been going on. When you just compare it to things like, again, Meta, Amazon. I'll get rid of the indicators real quick. So here's Amazon, Meta, Google, and Google still has some ways to go. Actually, it's testing a major fucking level here, actually slightly below it. Fuck, even Roku. God, I wish I fucking bought puts on Roku. Look at this fucking thing. A double top at 491 and now trades at 60. Yeah, I kind of feel like Tesla is the next thing to get chopped. Just now falling out of distribution, by the way, per the Snippy Snipe, the Wyckoff Sniper. And it's not looking good. It's got room all the way down to 240. It kind of just looks like it went through an episode of redistribution. This was the earnings call here, or earnings, sorry. So it kind of seems like it was just like another instance of distribution, so redistribution. But again, when you can consider just all of the shit that is going on and where it sits relative to everything else, it's barely taken any punches relative to all of its other native step siblings, I guess, if it's the redheaded stepchild here. So I really do think that this could easily go down 15 to 30% within the coming weeks, depending on what the overall market does. And then, my next kind of approach to it would be wait until it touches this accumulation line and let it squeeze between accumulation and distribution, because that has been a common theme for a very long time here, going all the way back to 2020 and IPO. That trend started about here, so 2019. Where again you can see where this wasn't the ideal bounce, it wasn't perfect, but you did get a very local bounce from that range, and then it squeezed through distribution, and then the next correction it had caught at accumulation and then squeezed into distribution, had another correction, bounced nearly fucking perfectly, squeezed between accumulation and distribution, and then did it again with earnings, and now here we are. So if it doesn't immediately just break through the fucking floor here, which if it does show signs of life at this level, I would then buy calls. QQQ, same thing as SPX. In theory, you know, it's not the perfect double bottom, so you could kind of perceive this as being another opportunity to get slammed again. But I'm just going to assume that everything in this market is so tangled up with itself that basically whatever SPX is doing is what other indices are going to be doing. Everything is way too interconnected at the moment. So I'm going to interpret it as a double bottom. So this has the same destiny as that of the SPX and basically every other fucking stock in this fucked up market. Let's see what these volatility talks do. Not particularly looking good. IMO. Yeah, like the selling pressure hasn't even really shown itself. If we look up here, we're currently down 18%, 19%, and there's still tons of buying taking place. Even back here, 27% decline, and that's where you saw the majority of selling taking place. And here we are over here, just this little like blip, and that has already shoved us down 19%. So something to keep in mind. Let's take a look at Bitcoin real quick. I think Bitcoin is about to take its next dive down, especially given the context we have with the rest of the broader markets. Literally this fucking close to being done with the video, and this fucking thing dies. God damn you, composite man. Bitcoin also looking at a double bottom, but again, given the rest of the context we have with the broader markets, I think this thing is going down to 12K very fast. Well, technically 17K, but then 12K right after that. This is not fucking looking good. Fuck it, maybe even 10. Yeah, no, 10. No, 12. And then 10. Yeah. 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 And then as far as the dollar goes, fucking ripping straight through the fucking roof, man. This is the weekly. This is the dollar's value on the weekly. Look at this shit. It's been an accumulation, a reaccumulation since fucking 2015. This is the weekly fucking chart, man. This is the weekly chart going. I mean, this goes all the way back to 1980 fucking 4, ironically. But just within the past fucking couple of years, I mean, let's go to the daily. Just going insane. Up 0.1% already. What the hell are futures? Futures cannot be looking good. Why are they? What? Okay, never mind. Futures are not open yet. But the dollar's going fucking insane. As far as like trend lines go, you can't really fit one exactly. But what we can do is one of these. I can't find it. Where's the fucking regression channel? There it is. Okay. Yeah. So the dollar's actually a little overextended if you want to do the linear regression thing here, right? The fucking R ratio here is 0.96. So that's a pretty good fit as far as the curve goes, meaning that this is definitely overextended. This is very much overextended. Now, in terms of if fundamentals can, or if technicals can outdo fundamentals here, because technically you're overextended, but fundamentally it's been underextended, over retracted for a long time. So on the daily, you know, definitely overextended. So if the dollar, if it truly is overextended, then if or when it falls, equities would rip. So this kind of looks like the alibi for Composite Man to just be like, yo, rippy Monday. I don't know, because this is definitely overstaying its welcome here at this particular level. Just going back to like when this particular uptrend started, this is quickly going parabolic, which is not sustainable. Just simply not sustainable. But it's still moving up. Now up 0.14%. Jesus Christ. I don't know. gonna be a wild fucking week, lads. That's about it for here. I'm gonna go take a nap. Stay black.